Good evening, ladies and gentlemen. Welcome to our weekly investor update. My name is Dan Theok, Senior Vice President of Investment Banking here at Mayberry Investments Limited, and I'll be your host for today. Joining me on the panel is series regular and brilliant investment advisor, Brandon Thomas, who will be contributing to today's discussions. Welcome, Brandon.
Thanks, Dan.
Good to have you back. If you like the content, then be sure to subscribe and hit the bell to stay up to date with the channel. We upload content like this every week. Today we'll be discussing DOLLA Financial Services Limited and Radio Jamaica Limited. If you'd like to begin investing in companies listed on the JSC, I take this moment to remind you that you can and should embark on your investment journey with Mayberry. So follow us on social media to learn more about how you can get started today. Okay, as we said, we'll be looking at DOLLA Financial Services and Radio Jamaica Limited. And with that, I'd like to begin today's presentation. So I'll ask Brandon to take it away with RJR.
Thanks again, Dan. So we'll be looking at RJR right now. We did a couple of weeks ago, but since the results just came out, recently, we wanted to touch back and to update you guys. So RJR would have posted in their year that ended in March 2022. They have posted revenues of 5.71 billion, which is up 10% year over year. They would be up 65% in operating profit and 100% in net profit after tax. So those are impressive results. RJR is growing, coming out of the pandemic nicely, and we see if that will continue as more ad spend will go back into the marketing budgets across different companies and find its way into RJR's P&L. Current share price is $2.91, and that gives us a PE of 20.63 times. And that's on a main market where the average PE is roughly 10.75 times. So it's trading rich. So RJR will have to grow into that valuation. There are plans that are afoot that I will get into in a bit. Indicated by management in the report is that the growth in the revenues came from, and they're mainly driven by increases in the audio division, which was at 15%, the print and online divisions up 2%, and the audio-visual division up 14%. And in addition to that, the company saw upswings and increased activities in their current year despite the pandemic. Moving on to the next slide, we see the quarterly profit movements. We see where the pandemic wasn't so kind to them, but coming out of that, we see where they've been consistently in profit, which is a positive for RJR, and hopefully that can continue. We see where they're consistently for the last except for Q2 of last year, they're consistently at that in and around that $100 million mark, and we want that to continue to grow moving forward. So we saw where it was at a high at 444 as at August of last year, and it has been trending down since then to where it is now at $2.91. So RJR is at a stage now where I think investors are waiting to see what's next, if these plans, some of the acquisitions that they have carried out over the last couple of years will bear fruit and allow the company to grow into that valuation. I want to get into a scheme of arrangement that is about to take place between 1834 Investments and RJR Limited. They are going to be amalgamated, and 1834 shareholders will either choose between receiving RJR shares, cash, or a mixture of both, depending on their choice. And RJR, once that amalgamation is happened, we can see 1834 results be consolidated into RJR's results, which obviously would bode well for them, profit-wise, and help to grow both their revenues and their profitability. Some of their associated companies, you might know their names. We're looking at companies like Gustazos, Keys, ePost Caribbean, Star Apple, which is in data analytics. So these are companies that want to grow and help RJR move forward in terms of profitability. And my personal view is that if you hold the shares right now, it is a hold, and I really want to see what is the next upcoming quarter for them and how they really perform. But I do expect, as I mentioned earlier, that ad spend will improve. We are currently in World Champs where TVJ is the has the rights to carry it, and World Cup is towards the end of this year. So these are events that I expect TVJ especially to really benefit from, and we see where that will take them in terms of their bottom line. Dan, you have any thoughts on RJR?
Yeah, thanks for that. This one's a tricky one for me, I'm going to be honest. I bought at the low a year ago, last year, July at $1.62. So a year later at $2.91, I'm on the sell wagon. It's trading rich at 20 times, like you said, in a market where I like to think of the main market as 14 times. So it's trading 40, 50% rich. The earnings have been really sporadic, up and down, up and down, up and down. I'm concerned about the industry in general with the digital divide that's coming and whether they're going to be able to keep up the pace with digital media, and we see that's really hot right now. So this one's tricky for me. It's a mature industry, erratic results, trading really rich, and I got it really cheap. So for me, it's a sell. For you long-term investors, you could hold it if you want, but they really have to grow into those earnings.
Agreed. Couldn't agree more.
Thanks for that, Brandon. Appreciate it. Moving right along, next up, I think we have DOLLA Financial Services Limited. And we've seen their results come out for 6 months ended June 2022. You guys know this one's brand new, the big hot IPO of 2022 that pulled in over $5 billion, no doubt because of the popularity of Kadeen Mears and Ryan Reed, no doubt. But I think they're delivering, and their first ever reported results we're seeing where their net interest income at $271 million is up 218%. And that sort of flows right down to crazy increase in profit before tax up to $132 million, a 368% increase, and their net profit after tax $119 million, 473% increase. So what do we know? They've grown their debt book rapidly to $1 billion in the last year. They just took in about $225 million net into their coffers. And yesterday, what did we hear? They're announcing that they're going to be raising $1 billion in bonds, no doubt to on-lend, and we can see that they're making crazy spreads in the on-lending business. We've also seen that they have the ability to grow their debt book substantially quickly and keep the quality of earnings going. So I'm going to predict that they're going to grow their debt book to about $2 billion. And we're going to see this EPS for the half year, which was 5 cents, double. So it'll get to about 10 cents for the half year, which means 20 cents for the full year. And at 20 cents for the full year, average junior market P of 18 times, I think this price is headed for 360. Because of their aggressive growth rate, it could trade at 20 times, which means $4. RJR is trading at 20 times. I don't see why DOLLA Financial as a junior market company wouldn't trade at 20 times. So although at $2.98 and using the trailing earnings, it looks rich at $32.69 in terms of the PE, it's obvious that this stock is trading on a forward market basis, and the market fully expects that they will grow that debt book from $1 billion to $2 billion and get the earnings doubled. So I think with that, I certainly like the stock. I think it's still fairly attractive at $3. I think the price will grow by 20 to 33% in the next 6 to 12 months if the IPO Kings can grow that business. So I think Kadeen and Ryan are up to the challenge. I think it's a great company. The market obviously seems to agree to me by virtue of the $5 billion in subscriptions that they pulled in. And we've already seen the stock trade more than $700 million post-IPO. So it's in good demand, trading well at $3. And I think the future is bright for them. It's a competitive space, but these guys seem to be able to differentiate themselves, and they seem to have a very good thing going. Next up, we can look at the earnings. Not much history because, again, they're brand new. And what we've seen here, again, in the last 2 quarters of earnings that are sort of consistently in that $60 million space. And they've just, accessed a lot more capital, $225 out of the IPO. I expect that they're going to access $500 to $1 billion in bond funding to further grow that debt book. And so I have every expectation we're going to come back in following quarters and see this earnings getting up to $100 million per quarter. That's my expectation, that they're going to be able to double this book. They've got some challenges, but they now have capital. They now have much larger attention coming out of the IPO, so marketing themselves, better presence. It's a great company with great leadership, and these are the things we look for investing in early and trying to hold for the long run. It's not unforeseeable that their debt book could one day get to $4 billion, similar to what Access Financials is at. These guys seem to be very aggressive, trying to grow the market and have a good niche. So this one's definitely a buy for me. Hopefully you got it before, like I did. I got some at the IPO at $1, and then I bought a little bit more at $3. So my average price is in the sort of $2 space. I feel very comfortable with that. And so I'm definitely going to hold this one and watch it grow. And we'll come back in 6 months' time to see if I was right or wrong. Brandon, your thoughts?
I couldn't agree more. I'm very bullish on dollar at the moment. Something to note then is, in the report it stated that, they only have 5% in expected credit losses and 6% in non-performing loans, which is really impressive for a microfinance entity. Cadiz in a recent public appearance said a couple of things that stood out to me. That he said the money raised in the IPO, which was just about 225 net, that has already been unlended, in just pretty much a month.
Yeah.
And that is why they need to go back to the market to raise $1 billion, because obviously with a company like Dollar, their money is their product. So they need to keep raising and unlending if they want to continue to aggressively grow their loan book and their revenues and profitability. They spoke to a Portmore location, brick and mortar location that should come in a very short order. And, Cadiz in the same public appearance mentioned that, they're looking for regional growth. There's already Instagram accounts. I don't know if people have seen it with Dollar Belize and Dollar Panama. So, these are territories that they're looking to get into. So I'm very bullish on Dollar. I think they're both Kadeen and Ryan, as you mentioned, Dan, are aggressively going after growth and expansion, and that is something that I love to see, the principles of companies that I am a shareholder of. So I'm a confident shareholder. I agree with Dan that this is going to 360 and above, and watch this space. We come back in a couple quarters or so, and we'll see if we were right or wrong.
Yep, thanks for that. And we're going to see a lot of corporate action items from them. I have no doubt. I had lunch with Kadeen, and he's a very ambitious guy. I think acquisition is very possible. Growing that debt book, whether organically or through acquisition, I think is a real strong possibility. And in the space, there's a lot of regulation coming, and there are lots of smaller businesses that probably won't keep in the space because of the higher regulation. So there are definitely some great acquisition opportunities out there, and I wouldn't be surprised if we don't see them taking advantage of that. So let's watch the space, guys. I think this one's going to keep growing pretty aggressively. They're going to get to $2 billion in the next 6 to 9 months. I'm going to predict, and we're going to see that earnings growing exponentially. Well, that's it for the reviews for this week. But before we go, I'm sure Brandon has some special advice for us.
Yes. So my investor tip today, guys, is pretty short. It's to really delve into the details and guard against confirmation bias. We as humans tend to run with the first bit of information that agrees with our already established viewpoint, and that can be a recipe for disaster when it comes to investing. You want to delve into the details, check the numbers, recheck the numbers, check your sources, making sure that the information is valid, and before making a decision. It is a recipe for disaster, as I mentioned, if you just run with the first bit of information or hearsay, just because you think it makes sense and it sounds nice. That's something that you have to guard against in investing if you want to be successful. So that's my investor tip. Guard against confirmation bias and always check and delve into the details. Thanks, guys. Happy investing.
Thanks for that, Brandon. I couldn't agree more. And if you have a doubt, please feel free to reach out to Mayberry, your trusted advisory, because not all equities are created equally. Not all IPOs are created equally. And many times I find friends talking at the high level about these IPOs. They're not going to read them. They're not going to dive deep into it to analyze the IPOs or the prospectuses. And we certainly do that here at Mayberry, and would be happy to give you our recommendations and advice. So thanks for that. I think very insightful. Well, folks, that's it for today's discussions. I'd like to thank our viewers for tuning in today. Your support is always appreciated. I'd also like to thank my fellow panelists, Brandon, for his insights and reviews today. Thanks,
Yeah.
Brandon.
Thanks, Dan.
Well, remember to look out for updates on our virtual investor forum on social media, where we share our live stream dates and upcoming guests, so follow us there for all things forum related. Also, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Well, remember, wise investors, keep safe, and slow and steady wins the race. Goodbye.